Hi, Matt McAleer, President, Director of Private Wealth, Cumberland Advisors, August 30th, just after the close. This summer is over in a flash. Earnings season over in a flash. Let's try to build on last week's video. And it's important that we try to do that week to week. Last week we spoke about the fact that technology, which had been the leader from a relative strength standpoint, really for going on 5 years, but for a good 18, 20, 24 months in a row, had given up a little bit of that strength to industrials and financials. Not enough to be a concern, but enough to be encouraged that the market was showing really significant breadth, a breadth breakout, multiple sectors working. Ideally, that's what we want to see. So let's take a quick look at this chart and see if we can't figure out why some of that is happening. You see the S&P earnings year over year. Keep in mind, this is year over year, not sequential quarter to quarter. The Magnificent Seven versus the rest of the S&P 500. See the orange box? That's the quarter that was just reported. Dynamite growth, 35% growth for the Magnificent Seven, almost unheard of. Reasonable, 7%, high single-digit growth for the rest of the S&P. Next quarter, Magnificent Seven starts to moderate, as does the S&P 500, the balance of them. But look at as we get into Q4, and these are FactSet Research's numbers. These are a view of earnings estimates across the street. Okay. When we get out to Q4, we're looking at a real bounce in the 493 S&P companies outside that Magnificent Seven, enough that it becomes an interesting trade. We know, you and I, that equities don't trade on today's information. They trade on future expectations. And that's what we're seeing, a real jump in future expectations over some of those sectors that have been left for the dead over the last 5 years. And we've spoken about them. Industrials, basic materials, financials. 2 years ago, we thought multiple banks were going out of business. So real nice breadth advantages here. So in terms of how that affects us from a portfolio management standpoint, in our US ETF, our largest single holding is in aerospace defense. That falls under industrials. That's a 13-14% position. Wonderful performance. Over in US core, we're balanced. Sure, we have some growth, but we also have equal weighted S&P 500 and cash flow indices represented by ETFs. Very good strength there. Tactical trend. Well, we see Berkshire Hathaway making an all-time high. What is Berkshire Hathaway? Industrials and financials, one of the largest insurance holding companies in the world. Throw in Apple on top of that, and it's not too bad. So I think we're positioned well. Now, we always want to have our eyes open for a rug pull. We've seen it before. Think back to Q4 23. We saw small caps start to work. We saw mid caps start to work. Once the year changed, that changed. Went back to large cap growth. So we will keep our eye on the analytics. Bonds, back and forth a little bit this week. And luckily, we have the Moose to fill you in. Take it away, John.
Hi, it's John Musso. I'm the CEO of Cumberland Advisors. It is Friday afternoon on August 30th. This is the bond report, the last day of the month. We saw Treasury yields creep up today. So for the week, they were up about 10 basis points from a 380 to a 390. Longer Treasuries a little more, also up about 10, up from about a 410 to a 420. Muni yields pretty much unchanged during the week. And this is an offset to last week where we saw, muni yields rise more than Treasuries in terms of on a relative basis. What happened this week in Treasuries? Listen, you had a very good number today on the PCE, the personal consumption expenditure. We know that's the favorite measure of inflation for the Federal Reserve. Came in at 0.2 for the month of July. That also meant that on a year-over-year basis, it was 2.5%. And more importantly, on a 3-month annualized basis, it's 1.7%. So it is certainly the kind of number the Fed would like to see. It reaffirms the fact that they are going to look to cut rates next month on September 18th when they meet. And of course, whether it's a quarter point or a half a point, you'll see the arguments go back and forth between now and then. I think this week, with yields rising a little bit, tells you that the markets think maybe it could be only 25 basis points. In other words, rather than give you the 50 at the beginning, let's start with 25, see how it goes, and maybe you do another 25 and another 25 before the end of the year. That seems to be the thinking this week. We'll know more, of course, as we go on. You did have some stronger numbers this week. You had some good spending numbers. You had basically initial jobless claims came in right on the number. There were very few surprises this week. So when you combine that with the fact that you're going into a holiday weekend and basically traders don't want to take a lot of positions into any long weekend, I think that led to a little bit of the treasury weakness that's out there. We know that a week from today, we will get the jobs report, be very important. And then after that, you will get a inflation report. So the Treasury will have that before they meet. On the muni side, you've had a fair amount of supply, and that has probably elevated muni yields and made them relatively cheap in our view. And certainly, if you think that they're going to be cheap and you're going to head into an election where you might be looking at higher tax rates after the election, it does make a compelling case for tax-free bonds in our view. One thing we try to take a look at is as you start getting closer to an election and you're basically 2 months out to the election, what kind of themes start to take place, and we will see some of that certainly after the debates, because we know in the background we have the tax cuts of 2017 will go away at the end of 2025. It'll be interesting to see if that's a debate point when we come up. We hope everybody has a great Labor Day weekend. Labor Day was established by President Grover Cleveland in 1894, and it's interesting that he was the president that established it, because that's what ex-President Donald Trump is trying to become, is this generation's Grover Cleveland, winning non-consecutive terms. So we hope everyone has a good weekend, and we will talk to you next week. Thanks a lot.
Thanks, everyone. Enjoy Labor Day weekend, and let's get after it next week.